Release of a crucial economic report from the Commerce Department. This as the Federal Reserve raised interest rates. Our chief economics correspondent, Rebecca Jarvis, is tracking it all. Good morning, Rebecca.
Good morning, Michael. And that critical report, the nation's GDP showing that for a second quarter in a row, economic activity in the United States declined. That is what some would call a recession, and it follows on the heels of the fourth interest rate hike so far this year.
This morning, as Americans brace for a possible recession, the Fed, determined to fight historic inflation, raising interest rates by another 0.75 percentage point, the fourth rate hike this year.
My colleagues and I are acutely aware that high inflation imposes significant hardship, especially on those least able to meet the higher costs of essentials like food, housing, and transportation.
Rising prices costing families an extra $493 a month, with the soaring cost of housing hitting many especially hard.
This has been very stressful overall because everything's going up, but my paycheck is not going up.
Asia Mabry, a public school employee and single mom in Louisville, Kentucky, forced to downsize when her rent rose more than $350 last month to $1,229.
I am now in a one-bedroom, and I am paying more than I was with the two-bedroom.
While there's hope the Fed's moves will eventually bring prices down, they also mean the cost to borrow money is going up. Take, for example, the mortgage on the average $416,000 home in America. Assuming you put 20% down, earlier this year, it would have cost you about $1,700 a month to own. But at today's 30-year fixed rates, that same house will cost you more than $2,300 a month.
Because of home price appreciation and because of rising mortgage rates, the average monthly payment on a mortgage has risen 40% since the start of this year.
According to the Commerce Department, GDP shrank 0.9% in the second quarter. That makes it two back-to-back quarters of economic activity declining here in the United States. And that is considered here on Wall Street a strong signal that we either are in recession or will be soon. The National Bureau of Economic Research, the nonpartisan nonprofit which officially defines recessions, takes a look at these things through a slightly broader spectrum. They see a recession as a significant decline in economic activity spread out throughout the economy and lasting several months. And while we may not officially be in a recession at this moment in time, there are signs that things are hurting for Americans. It can still be painful even if we're not technically in a recession, and that pain starts with inflation, and it is the thing the Federal Reserve is trying so hard to tackle here, Robin.
Yes, it still feels bad for a lot of folks, and we'll see what happens later today. Rebecca, thank you.
Hi, everyone. George Stephanopoulos here. Thanks for checking out the ABC News YouTube channel. If you'd like to get more videos, show highlights, and watch live event coverage, click on the right over here to subscribe to our channel. And don't forget to download the ABC News app for breaking news alerts. Thanks for watching.